our stock of the day, Life360, which has reported announcing record results for the second quarter as it reached more than 100 million monthly active users for the first time. Total second quarter revenue up 38% to $159 million US. Subscription revenue 31% higher, while advertising revenue jumped 315% to $22 million. The location sharing company increasing its subscription revenue guidance for the year, but cut its hardware revenue expectations. Paying Circle members grew 27% to $3.2 million. So it has been hammered though, off the back of that, down 15% in this morning's trade. Kevin, let's start with you. What did you make of what we heard from the company and that reaction on the market?
It's interesting, isn't it? It's been a company that hasn't made a profit for quite a while, quite a long time. It's been developing, obviously, as they do develop their business, and the share price has been quite high. As soon as they start making a profit, the share price goes down. Go figure. Why is that? Yes, I mean, obviously from a Teaminvest point of view, because it's only just started making a profit, we wouldn't be looking at it just yet. But it is an interesting business, the business of tracking everything, basically, and it's becoming an increasing part of life, particularly in America these days. You want to track when someone arrives home, when your kids are out doing sport or party or whatever. You want to make sure they're in the right place. And of course, that's how the business started. But the other interesting aspect of it is advertising, because instead of relying on AI to kind of second guess when to send and what to send people advertising, it's got real-time data, so the company can know when you walk into a supermarket, and it can target your advertising so that it can say, you're walking into this supermarket, and one of its clients can say, well, maybe you'd like to buy this or whatever, which is kind of a bit scary in some ways, a bit Big Brother. But it seems to be a part of life. And of course, they're also tracking pets and things and keeping track of people in cars. And it's got lots of safety features like, accident reporting, or if your elderly parent is doing something that is out of habit, if they haven't moved for a while, it can send alerts and things like that, all these safety features. So it is an interesting company. It looks like it's got good growth prospects, but as I say, from a Teaminvest point of view, we wouldn't look at it until it's got a record of reliable profits and growing profits. And I personally wonder when does tracking slip into surveillance, and that might be something for the future.
All right, that sounds just a little sinister, but I know, given I use it myself, certainly surveilling my own children, I guess that's the point. I'm going to call it a hold from your point of view. I know that you don't look at it as a Teaminvest point of view, but you think perhaps if you were there, probably stick with it.
If you wanted a speculative, speculative interest, have a hold on that and see how it goes, I'd say.
All right, okay. Phil, how do you see it?
I'm going to call it a sell, because this is a volatile stock. I mean, the result was okay. I don't think as good as some of the headlines suggested, because the problem I have with technology companies, people like to talk top line, annual recurring revenue, etc. I'm old school. Profits and cash flow. Show me the cash flow. Profits went backwards, despite the material top line increases and all the metrics that tech companies like to tell us analysts. Net income fell from $7 million US to $5.1 million US. So despite that growth, profits went backwards. So that red flag number one. The stock had surged almost 50% in the 3 months leading up to this result. So the market was expecting something, but it was down 20% for the year. So people are trying to trade this stock around events. And clearly someone thought, or people thought there was some sort of upgrade coming or a beat coming, didn't get it. So buy the rumor, sell the fact, and if you got out on open, then you traded that profitably. I can't do that. You're a better stock picker than me if you can do that. I'll come back to what does it do. It's a tracking app. So does Apple. So does Google. So do other Huawei. We carry our devices around. This is the product you use if you don't want to give your kid or your dog an Apple iPhone or a Samsung device. Over time, your kid will get the Apple iPhone and they'll switch from that sort of tracking to the Apple tracking, etc. So because Apple and Google and others can do this inside their own ecosystem, I just think their moat isn't as big as some analysts forecast, and it's just a matter of time before the consumer says, why do I have so many devices connected to my person? I can get rid of the third party, just do everything inside the Apple or the Google ecosystem. One less product, one less subscription revenue.
But they haven't done it yet. Why not?
Well, there's the Find My. Find My. So,
but I don't think it has those features that.
It's definitely got more. Without the extra features, no one would use it. No one would pay for it. And my understanding of the selling point is, well, do you want to give your kid a phone or give your kid a tracking device? Okay, so I'm not going to give my kid a smartphone just yet. Give them a dumb tracking device where I can watch them and they can't surf the internet, etc. And obviously, customers are subscribing to that because their subscriber numbers grew, but they're not doing so profitably. So what happens when Apple says, "Hey, we'll give you a dumb version of a smarter version of the Apple tracking device that gives you a bit more information rather than the location," and then this business model is dead. Maybe Apple won't do that anytime soon, but they could. So just be careful how much you pay for a third-party product when the first-party provider could put them out of business if they chose to. I'm just saying, at this price, I think there's too much built in. I'm a seller.
But to the point where, given that threat, you would not invest in the company at all now?
At this price? No.
No, but regardless of the price, because you're saying there's potential that...
No, I mean, I do believe in present value of future cash flows, but I mean, even with the recent price move, this stock's at 27 times. People think CBA is more expensive at about the same multiple, 26 times. So
yeah.
I would rather buy CBA with significantly more cash flow than Life360.
That's a little more stable. No, it's more my point of whether its business model is under imminent threat. But
maybe not imminent, but
yeah, it may well happen.
Yeah.
All right, so that is our stock of the day. Let's call it a hold and a sell for Life360.